The Chinese delivery giant ZTO reported earnings that missed estimates, as well as third-quarter revenue forecasts below even the lowest analyst prediction. Well, joining us exclusively is the company's Chief Finance Officer, James Guo. James, what's going wrong here?
No, nothing's going wrong here. We're still optimistic about the business outlook and also about very confident in our business fundamentals. So we're confident we'll continue to increase our market share and also improve our operating efficiency and also create more value for our shareholders in the upcoming quarters.
Yeah. Does it come at a price, though? How are your margins going to look with these improved efficiencies and this expansion plan?
Yeah, we just released our Q2 earnings release. As you can tell from the Q2 results, we continue to grow our parcel volume at a pace well above the industry average. That means we continue to gain market share in the past quarters. And in terms of operating margin, as you can see, we continue to increase our gross margin and operating margin in the past quarters. And actually, our margin growth is actually much higher than the revenue growth because of the optimized product structure and also many of the cost-cutting measures that we've been implementing over the past couple of quarters.
Well, what do you do about getting yourself weaned off one company? And I'm talking about Alibaba here. I think 75% of your parcel volume is from that company. Now, how do you diversify from there?
Yeah, that's a good question. And actually, we have been a very long-term and very strategic partners with Alibaba. And actually, our exposure to Alibaba platform has been declining over time. Last year, it's about 75%, and now it has declined to about 71 to 72% this year. So, but we think we share a common goal with Alibaba because our common goal is to help to improve the service quality that we provide to the many merchants and also consumers at the Alibaba platform so that we can attract a lot more merchants doing business at the Alibaba platform and also attract a lot more consumers to spend at the Alibaba platform. So everyone will benefit from that process.
Well, you've come to a point, probably a fork in the road here, where you need to scale up more, don't you, given the ambitious plans that you have right now. So how do you make that next jump to the next tier, the next scaling up that you need to do? We believe that the logistics sectors in China still has huge growth potential because according to the State Post Bureau, the total parcel volume of the industry is expected to hit about 70 billion by 2020. That means there's still huge growth potential over the next 4 years. And as a market leader, we continue to provide quality services to the network partners and also the merchants and the consumers. So we are in a better position to increase our market share over time. And actually, in the past 6 years, we have been successfully increasing our market share from about 7.6% in 2011 to over 15% in 2017. So market share over double. So as we continue to gain market share, we benefit significantly from economies of scales. So as you can tell from our Q2 results, we have managed to reduce our unit cost of revenue from about 1.24 cents RMB per parcel to about a little bit over 1.11 per parcel in this quarter on a year-over-year basis. So we have confidence in our ability to continue to improve operational efficiency and also maintain a very healthy operating margin.
James, you said to Rich earlier that nothing's gone wrong. Your ADRs are down, almost 30% from the IPO price. Clearly, shareholders think that something have gone wrong. So what are they not seeing?
Well, I think the stock price is affected by many different factors. The good news is the management team has not been too much distracted by the day-to-day stock price. We continue to focus on executing on our growth strategies. For example, we continue to scale up our business to gain market share. We believe as long as we continue to deliver good results and the stock price will be back and all of these efforts will be translated into long-term shareholder gain.
James, are you keen to make an investment to take a stake in or do a tie-up with an airline? Would that be beneficial? Your competitors have done that, and there's been lots of talk about the mixed ownership reform being the next big thing for China.
Yep. We're very interested in participating in that initiative, and we'll never stop exploring opportunities in the market as long as those opportunities can generate strategic value and or synergies for the company.
Okay, I need to ask you, James, about this pending lawsuit that alleges that the company inflated your profit margins ahead of the IPO to get investor interest to keep some of these less profitable businesses off book. What's your response to that? And is that clearly part of the reason why investors have not felt so confident about the stock?
Yeah, the filing of a lawsuit against the company doesn't mean that the management team, the company, or the board of directors have engaged in any inappropriate conduct. And actually, we believe those allegations has no merits. We will defend, the company will defend itself vigorously and protect its legal rights. And actually, we have engaged U.S. lawyers to deal with the lawsuits.